So it looks like the U.S. credit rating dropped. You can see from Financial Juice. Shout out to my Discord member Lowball. From Moody's, United States rating cuts to AA1 from AAA. It went down, guys. A couple ways to look at this. AA1, from what I understand it, and I could be wrong, AA1 is still overall good. It's good credit rating. But most people might be looking at it like, hey, AA1 is probably good, but we're heading in the wrong direction by dropping from AAA to AA1. My main thing is, how is the market going to react to this? We look at the daily chart. You can clearly see that the last few weeks, the last almost 2 months now, early April, June's around the corner, we've been bullish. However, look at this is the 15-minute chart. The reaction with our credit rating going down, well, the market didn't take that too lightly. They didn't look too happy. So now the question is, well, the initial reaction after market on the Friday was bearish. Will it continue into today, into this week? Not today. Today's a Sunday, but into this week, starting tomorrow, Monday. And as a price action guy, I need to know the levels. I need to know the setups. The setups that happened recently was that we broke out of an inside candle setup. We broke it out on Thursday, and then Friday we back tested the breakout level as a support. So okay, good. We know the setup. So if that bearish news that came out last week is going to affect the market into this week and push the market down, we know now that the 589 level, right? That's what the inside candle breakout is based on. That level right there, 589. So if the news carries over, we know that if we're below 589, this is possibly false breakout mode. This is possibly invalidating that breakout. So based on the charts, that is bearish signs, right? We're below 589. That's when I would take the news a little bit more serious about our credit rating dropping. I'm going to get bearish down to 585. I'm going to play safe level to level style, and below 585, which is a macro level fib level, I would favor a much deeper pullback. The market has multiple reasons to drop to the downside. Okay, we have news reasons, I guess. A news reason could be an overreaction, could be a valid reaction, but if we dropping down because our credit rating is dropping, that's a valid reason. But is there a reason on the charts? Absolutely. RSI is very overbought, right? We are pretty overextended, far from this uptrend line, pretty far from it. A back test would be healthy to continue the uptrend line back to all-time highs. Is there reasons to drop to the downside? Yes. Does it have to drop to the downside? Absolutely not. So as sheep-style traders who trade both direction, we need to be open to all scenarios. If we drop below 589 and 585, yes, Uncle charters would definitely favor a pullback. $10, $15 back to the downside. Below the breakdown of this trend line, would need below 568. I would be bear biased once again. But as long as above 589, guys, despite what the news says, I'm going to give the bulls the benefit of the doubt because I'm going to follow the price action. And I encourage everyone who listens to me to follow and listen to the price action. If we are above 589, we're still overall bullish. Now, what was Friday's high? 594.5. I will be watching that level as a resistance level. So if we're above 589, I have resistance at 591, 593, and then 594.5. If we can clear those levels, it's a good chance we'll pop up 596, 598 in the big even number of 600. Above 600, then maybe, just maybe, we can get back to all-time highs. So I'm Uncle Charters is going to keep it simple for you guys. Despite what the news says, it sounds bearish, but despite what the news says, the most important thing is the price action. Above 589, we are still overall bullish on the SPY. This breakout is not invalidated. But if we want to get bearish, remember, we've been taking the stairways up. So if we've been taking the stairways up, what does that mean? That means we need that elevator down. Can that news last week give us that elevator down? Can it give us the exhaustion gap down? It starts with that false breakout setup. It starts with the breakdown of support. Remember when we hit all-time highs? Imagine thinking you had to get up here for a move. No. If it's truly the top, you will have plenty of opportunities to head to the downside. And it all starts with the false breakout setup, whether it's a gap down or a traditional breakdown. 589 and 585 are your levels to watch if we're going to go for a deeper pullback. $15, $20 pullback to the downside. But if we're above, then we may still creep up, melt up, take the stairways up to that 600 plus level. All I'm saying is follow that price action unbiasedly. Now here is the triple Q, just consolidating still below that 522 level. Uncle Charles is still watching. That's that orange trend line. We do have an inside candle setup. Now the mother candle's high is at 521.93, but Uncle's still gonna watch that 522 level. Might as well, just a few cents off. If we are above 522, then the plan is the same. We are going up higher. We are going to remain bullish. Good chance above 522 we go hit 526 and 530 or higher level. Above 522, bullishness continues. Now, if we are gonna pull back, what does it start with? It starts with the false breakout setup or even a gap down. Now, like I said, we have an inside candle setup. The mother candle's low is all the way down at 515. So remember Uncle's levels. I have a level at 520, 517, and 515. If we break down those levels, especially below 515, Uncle Charters would favor a deeper pullback down to 511, 509.5, 507, or lower. If we're going to get a pullback down to the trend line, that's all the way back down to 580, 487, 490 area, guys. That would be a lovely move to the downside. But it will not go down there unless we get the false breakout setup. 515 is your critical level to watch, especially if you're a swing trader. Below it, bearish. Above 522, we are heading up higher. NVDA also consolidating just below my fib level at 136.3-ish. I do have that 135 level, which NVDA managed to reclaim last Friday. If we are to get more upside, 135, 136.3 must clear. Follow the price action, and it should send us up to 138 and 140 plus. But if the price action says bearish, then 133.5, 132, and 130.6 fib level must fail. And if those levels fail, well, NVDA has lots of reasons to head back to the downside. We don't follow the money. We follow the price action, and the money follows us. Oh, that's a beautiful statement. I love that one. Speaking of loving stuff, here's Tesla. Looking bullish still. Higher close. However, it didn't quite clear the 1.786 fib level at 352.84. If we are to get more upside, it closed at 349.98, well, around 350. So I do have resistance at 351 and 352.84. In my opinion, I'd rather we round it up to 353. Clearing 353, I would favor more upside. 355, 360, 368, and 369.5 would be my targets. Tesla is a volatile stock. That's why I'm spreading out the levels a bit. Up to you guys what you want to do. If we are to pull back, though, I do have support at 349.6, 348, 345, 341, and the critical fib level at 339.8. Below 339.8, Uncle Charles would definitely favor a much deeper pullback. We have a few gaps that can be filled. Play it level to level, but with Tesla, anything can happen. And if we break down those support levels I mentioned, we can get a nice, nasty pullback. It will start with the breakdown of 349.6 and 348. Critical level, though, support level is 339.8. It's a little bit far away from where it currently closed, but that's the level to watch. And below it, I would be bearish. and above 351 and 353, don't argue with the price action. The melt up or the bounce up continues. Now, volatile stocks, if you're looking for volatile stocks, look no further. Coin is here. Holy moly donut, shop. What a bounce from last week. What a bounce. Reclaim the 257.5 level. It started a lot lower than that. It was a beautiful move. But once it reclaimed the 257.5 level, it just kept on going. Pause around the 270-ish level. I have resistance at 268, 270, and 271.3. Guys, if we clear those levels, more upside incoming. This is a volatile stock, so there is lots of money to be made. But if it is pullback time, 266 is support, 264 pullback time. Take down those support levels. It should send us back down to 260 and 257.5, and below 257.5, I would definitely favor a much deeper pullback. Send us back down to the low 240s, maybe back into the 230s. So bears really want that false breakout. Break down those support levels that I mentioned, 266, 264, 260, and 257.5, and we should head down lower. But if we clear resistance, 268, 270, 271.3, more upside possible. Possibly back up to 280 in the 300 area. And here is the VIX, not looking bullish, unfortunately. If that 17 level fails, we are dropping much lower to the downside. But the breakout level is also getting lower. So if we get a breakout of this wedge, breakout 19, we're definitely bullish again. 19, 20.8 or higher incoming. Bullish above 19, bearish below 17. We didn't get the breakout. We also didn't quite get the breakdown. So we'll see what happens. Big move incoming. Get ready, guys. It's going to be a great week. I love y'all. Peace.